Hey guys, so in this video we will be going into the concept of pivot points and how we use them to gauge more precise entries. As always, we don't use them on their own but in combination with price action we have already established. So to add in the pivot points, right click, insert indicator, go to pivot points standard. Now remove the SR levels and just keep the pivot only. Also, change the pivot time frame to daily. Here is the pound dollar. Remember that great setups take time to develop, and our main focus is showing traders how to take high quality trades that follow our main core strategies, which is top-down multi-time frame entries. Starting with the monthly, we had multiple rejections of this key monthly dynamic level with wicks, as well as rejections of the 50 EMA that lines up perfectly. Jumping to the weekly, we had this great weekly divergence. And remember that weekly divergence doesn't come often, but when it does, it is a strong signal of a possible trend change. Now, here in the daily is where you would enter on a traditional swing trade. This point here is the higher high of the weekly divergence, and you could have gone in on the break of the trend line here that confirms the monthly and weekly time frame bearish price action. Now, through using pivot points, you could have gone in earlier with a more aggressive entry. So what we did is we jumped to the 1 hour time frame. And remember that this move up here is the formation of the weekly divergence higher high. Now, as you can see, price is in a clear uptrend, and we were waiting for the uptrend to be over to look for an early entry. Also, notice how in an uptrend, price is moving above the pivot. We then had a break of trend line, break below the pivot and below the 50 EMA, a pullback to reject the pivot point, followed by an EMA cross, which was picture perfect. This allowed for us to get in early, but also have a tighter stop loss. And as you can see, if you manage this position effectively, with the move of the stop loss to break even, just from this one trade, you could have banked a lot of percentage. Waiting for high quality trades like this is what we are all about. Nothing has changed. We are still entering with our main strategies, except we went down to the 1 hour time frame and used the pivot points to get in with a more precise early entry that allowed us to put a tighter stop loss in. So let's do this again on another pair. Here's the pound yen. Starting from the monthly, we had a lower high, which shows that we are in a downtrend. So jumping to the weekly, we had a break of trend line and a pullback with long wicks rejecting this key level of resistance, rejecting the broken trend line and rejecting the 14 EMA crossing the 50 EMA, which is all more bearish bias. Now on the daily, we again had a double top, which was another bearish bias. And what we did was we went down to the 1 hour time frame to look for a confirmation of all the bearish price action from the higher time frames. Here on the 1 hour time frame, we had a break of trend line, and now everything from the monthly down to the 1 hour time frame is bearish. We then had a pullback to reject the pivot and the 50 EMA twice, meaning you had two opportunities to enter this trade short and can put in a decent stop loss in. These are what we call A+ trade entries. Now, we will show you an example of a more aggressive approach to the strategy, which is when you are only using the lower time frames for a quick move and not following our main strategies, which is more risky. So here's the Kiwi dollar. As you already know, we had this on our watch list, and we were waiting for a breakout of this trend line and a resistance for a swing trade long. But there was also an early intraday pivot entry on this pair. So when trading this aggressive pivot entry, you need something we call a trigger event, meaning something that can trigger a possible quick reversal. Now on the daily time frame, we have divergence, and this is a perfect divergence, which is when it is very wide, which you don't always see. Both the points of this divergence is also within oversold RSI. So in divergence, you don't know how low the second point will go, which is why you need a breakout on the 1 hour time frame to confirm that the second point of divergence is over and that you can enter a quick trade. This is a lot like the pound USD example we showed you, where we waited for the 1 hour to confirm the second divergent point. So jumping to the 1 hour time frame. Again, this is where the second divergent head was occurring. Price broke this trend line, broke above the 50 EMA, broke above the pivots. The 14 EMA then crossed the 50 EMA, and we had a great pullback to reject the 50 EMA and the pivot area with a great bullish green long wick candle, which would have made a great intraday quick trade. The key in these kinds of trades is to look for smooth price action, like you just saw, not choppiness, as choppiness is not a good sign. Again, you don't have to take these aggressive methods as they fall outside of our core strategies, but the choice is up to you. So in the next episode, we will continue to add on to these intraday concepts to dive deeper. So thanks for watching, and I'll see you in the next episode.